In this presentation, I'll be presenting the Bitcoin relative strength strategy. Why are we interested in Bitcoin? Bitcoin is one of the highest performing liquid assets in the world, and it is extremely liquid. It became widely transacted in 2016, where it approached 10 million transactions per month. And over that time frame since 2016, its compounded annualized growth rate is 81%. That's really huge. But it's a very volatile asset, and since 2016, its maximum peak to valley drawdown has been around negative 76%. So the question is, can we use active management to match or exceed Bitcoin's performance and reduce the drawdown? So keep watching to find out. To start off, we're going to look at a very simple rule as a base case. So what if we use this trend following rule? The rule is, if Bitcoin is in a 1-year trailing uptrend, you hold. But if Bitcoin is in a 1-year trailing downtrend, then you sell, and you want to be in cash. So the results of doing this, going from 2016 to 2024, is if you just bought and held Bitcoin, $10,000 invested in 2016 would be worth $1.2 million today in 2024. Whereas if you had invested in that simple trend strategy, the $10,000 invested in 2016 would currently be worth $1.4 million currently. So it's not bad. The trend system actually beats the buy and hold by a little bit, but it still has a 45% drawdown, and the equity curve is still pretty lumpy. So I believe that we can do better than this, and I'll talk about a method to accomplish that. So that's where the other assets come in. We want to do a relative strength strategy, and we want to combine Bitcoin trading with gold and the S&P 500 to improve performance. Why are we choosing gold and S&P 500? Well, they're uncorrelated to Bitcoin, and they both have long-term structural upward bias. So at the end of every month, we evaluate the following condition. We measure relative strength between Bitcoin, gold, and the S&P 500, where we calculate the recent performance of each asset and switch into the strongest performing asset. That's pretty much it. And there's also a risk management piece, which mitigates how much money you can lose on any given month. So you want to protect your capital with a stop loss. If your maximum allowable loss is breached intra-month, then you want to sell the asset, whatever it is you're holding, and you want to buy a money market fund or a treasury bill or whatever you want. And here are the back-tested results of applying that rule. The results are actually pretty astounding. So the black line here is the strategy, the relative strength strategy, and the blue line is buy and hold Grayscale Bitcoin Trust. Now for the back test, I didn't use cash Bitcoin because we're going to be doing this in an account where you want to be able to switch between the three assets we spoke about. And those are available in ETF form. So the Grayscale Bitcoin Trust, it's the longest publicly traded Bitcoin fund that's available. It has history going back to 2016. So here it is. You can see that the growth of $10,000 starting in 2016 is incredibly high. Compared to the Grayscale Bitcoin Trust, which itself is pretty high. So if you look at the compounded annual rate of return for the buy and hold, which is the GBTC, the Grayscale, the rate of return is, annualized rate of return is 69% with a max drawdown of 83%. But with the relative strength switching strategy, the annualized rate of return is 107% with a max drawdown of negative 38%. So you got a huge pickup in performance, and you're cutting the drawdown by more than half. And the ending value, if you had invested $10,000 in the GBTC, the ending value today would be just over $1 million. But with the relative strength strategy, it would be about $6.5 million. So the big difference. And this shows you the underwater graph of doing the GBTC buy and hold versus the switching strategy. The blue area here is the Grayscale Bitcoin Trust drawdowns, and that thing had a drawdown of more than 80% a couple times since 2016. Whereas the darker shaded area is the strategy. You can see the drawdowns are just way more controlled, and the biggest one with that was maybe 38%. How do you trade this strategy? Well, you evaluate the rules at the end of each month and take a position in Bitcoin, gold, or S&P 500. The backtest is based on unleveraged Bitcoin, gold, and S&P 500 and can be executed using the following ETFs. For Bitcoin, you can use ETFs such as IBIT and FBTC, but there's a whole range of different ETFs that provide Bitcoin exposure nowadays. So you can do some research on Google and find the one that you like. For gold, pretty much the only game in town is GLD. And for the S&P 500, you want to be using the SPY. And if you happen to be a futures trader and you have a small futures account, you can do this strategy using micro Bitcoin futures, symbol MBT, micro gold futures, MGC, and micro S&P E-mini futures, which is MES. So in conclusion, Bitcoin has been one of the highest performing liquid assets in the world, but it's extremely volatile and psychologically difficult to hold long term because of huge multi-year drawdowns. The Bitcoin relative strength strategy is a good alternative to buying and holding Bitcoin because it provides a significantly higher annualized ROR and half the drawdown of buy and hold. If you're interested in getting the exact investment rules for the strategy and how to implement it in real life, please go to my website. Here's the URL for this blog post for this strategy, and I've also pasted this URL in the description box below. So that concludes my presentation for today. Thank you for watching.